You're watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hey, good afternoon, everybody. Getting adjusted here and ready for our next Master Trader Live. Little switch up today. We usually don't focus on news very much. So this is, I think, a timely subject. There's lots of news in the markets. And as you all know, our approach is a technical one. Pretty basic. Is it going up, down, or sideways? What's to the left? Is there a pattern? But news has an effect on the markets, obviously. Look at today. Things were great for a couple of days. Some news comes out. Things go up and down. It's what I kind of call this market Mr. Schizophrenic. And what that really means is there's a lot of uncertainty in the markets. And of course there is. When you talk about hasn't been inflation like this in 40 years. You have an administration that's trying to destroy the country, in my opinion, stopping oil flows. And so just a lot of stuff going on, and news is flowing in and out. And you see the patterns just, hey, it's happy times again, new bull market. Oh my God, no, it's still a bear market. Down we go again. And so look, whatever the news is, it really comes down to what do the charts tell us, because ultimately that is the truth. Doesn't mean we want to ignore the news, because it can help us make money or stay out of trouble. So let's do it.
Good afternoon, everybody. Yeah, just to add to that, we don't, how I summarize it is we're going to teach you proper thinking today about when you hear a news item. But the point that we're going to keep drilling over and over today is based on our technical approach. I don't care two hoots of what the news is if the chart doesn't support it. So we're going to show you how we use news to look for opportunity, to trade with the news because the chart is supported, how to find competitors and related companies, and when to fade it. So this is a marvelous session, in my opinion. And so we start with our technical approach to trading anything that moves here. No setup, no action. I don't care about the news. I don't care about the fundamentals. I don't care about anything. And then we put all of our other concepts together with that setup on whatever time frame you're trading. And we see if it's a high probability setup by seeing where it is in the trends, support and resistance, multiple time frames, relative strength, weakness, what are the market internals doing, and then we just manage in between. So this is going to be a very key summary slide right here. And Greg, you know this, we met 25 years ago, and this little snippet right here was obviously your former company, and I did a specialty educational, CD at the time on.
What the hell's a CD?
What's that?
What's a CD?
Well, that's what I mean. And so a lot of what I'm going to share with you today, so what I was about to say was, I told you this story 25 years ago, but when I started trading, I went into a local day trading shop, had no idea what I was doing, reading technicals, but I got interested in the stock market by this character named Wade Cook, who used to drive taxis, and I bought one of his little news beepers, and he would just try to teach that if X happens, then do Y. And I kept losing doing that. Stock split, buy. Good earnings, buy. The CEO left, sell. He would just teach you X and Y. And then when I started looking at the charts, once it came to my news beeper, which we know is late, right? It takes a while for the news guy to type it into the beeper and for it to get to me. And
Dan's
so
old, man. He even had beepers.
so then I look at the chart and I'm like, no wonder I'm losing. Look what I'm doing on this chart here. And so that's what motivated me to study this in great detail. And so in this old CD, I researched tons of event studies, and I said, okay, based on this news, what does history say that it should do? And an event study tries to pull out the part of the news that made the stock move independent of the news. Like if the market's up 2%, well, you can't say the stock's up 2% because they adopted a new marketing campaign. It doesn't make sense. So anyway, you don't have to worry about event studies. You have to worry about what we're going to teach you here in the next 52 minutes. The media, the media's job is to be the media. It's like they have a template that says XYZ is up, and then their little typist has to type in a reason. And they just come up with some explanation, which they're doing their job of trying to get people to watch eyeballs, but it's meaningless to me. What moves stocks is remember, the stock market is the collective sum of all market participants for trading on all different reasons, all different methodologies, all different timeframes. When your news event comes out, if it's a pending known news event, as opposed to an airplane crash or whatever that just happens midstream, it's what did the stock market price in to the news? It's not really the news itself. And this is particularly clear with earnings. I'm going to show you how earnings can go up or down regardless of whether they beat or blew out or missed it or this or that. That's nonsense. And we hear people saying that, unfortunately, all the time when they come in and take a trial in our green trading room. Oh, Microsoft blew out earnings. Let's buy it. Well, follow what we're going to teach you here today, and I'll tell you if we should buy it or not. So the news ignites greed and fear. We're going to show you again how to trade with and against it. I read Barron's, for example, on the weekends, some stories I like, the commentary, this and that, but I also just pick up a bunch of symbols, and I don't read the article, but I say, hey, it's a full page article. Other people are reading this. Let me see if there's a tradable opportunity here. Price is king. So I don't care if you're going, there could be news on a bus going by. I might pull it up to say, I don't care about what the thing is. Let me see if I can find an opportunity with it. We know about buy the rumor, sell the news. If something is moving in to a news event, be cautious on that because it's already baked in. But here's a question you should ask yourself when you hear a news event. Okay, I hear this event, XYZ. Just using common sense, what should the likely reaction be? And ask yourself, who will benefit from this news from a fundamental standpoint and a human greed standpoint? And then we want to see how the chart is reacting to that. Who will be harmed by this news? So we're looking for competitors to also find trades on news. So these are some old headlines, but just look at the title here. You can read through them. What are your thoughts when you read these things? We aren't going to get into them, but I'm just giving you examples of, you might want to immediately do something without applying what we're going to teach you here today. This is Lyft when they were an IPO. Look at Wall Street Journal cover. Lyft shares surge in public debut. Greg, do you want to take this one? Is that surging in a public debut? And do you want to buy the open?
I'm sure they mean based on what the IPO was, I guess, going to come out at, or what people paid, and then what there was such a bid for it, they gapped it higher. And boy, did those that were able to sell it happy about that.
Right, but
and
Today's,
collapsed.
today's subject is news, and we want to separate out the novice trader reacting to news and applying our approach. So
Yeah.
this opened up here, the IPO, and got slammed with selling. Finally, a green bar, it's going up, coming down. Now it's on my list for a potential double bottom. I don't have it yet. I don't have a reversal. But see, regardless of what this newspaper says, I would, even as a day trade, this wide range bar is telling me there's no intraday high probability long setup to fade this heavy selling. So let's keep going. We have a lot of examples. This was just last Friday. Carnival Cruise Line came out right here. Carnival stocks sinks as discounting dings earnings. They lost 23% of their value in one day. So we pull up the chart last Friday morning, and we see this bearish gap under support after a bear 180 reversal in a trading range. Notice that there's no tail, which is telling me it didn't bounce, right? So that is a candidate to trade with the news for bearish stock and option. You know, start off with a day trade and see if it can turn into a swing trade.
Right. So Dan, I would say, as opposed to, it's a pattern, as opposed to maybe it had been falling for 3 weeks.
Correct.
And it came out.
Right. And I'm going to show you FedEx and what happened when we did exactly that. We faded those. Correct. So this is an example where the chart is telling us this is an igniting gap breakdown. And then there's only 3 main competitors. You know, you got the foreign Kook and Norwegian and RCL. So here's RCL ship, and you know, not the same pattern, but same day trade 5-minute low. You got bearish stock and option trades.
And what I would point out to that is the psychology of what happened there is that besides breaking under that support where buyers had been stepping up over the prior few days, they, you know, did the Pavlov dog thing. Hey, I made money every time it came down to $9. Buy it again. And maybe they didn't even know the earnings were coming out. Maybe they didn't care, but you had that nice big green bar. The next day was earnings coming out. Somebody got out, but the psychology of the pattern was you had this accumulation going on there, and you know what becomes support support can become resistance and vice versa. But it gapped down, and now you had all of that supply, and those that bought said, "Hey, you know, it ain't working. Hit the bid," and so the whole thing feeds on itself, and the thing dropped like a rock.
And Greg, I should have underlined this in red right here. It says Carnival's loss narrowed and the sales rose significantly. If you were just to read that headline, if you were a novice not using what we're showing you here today, you would say, buy it. Good fundamentals. Their loss narrowed and sales rose significantly. And then you wonder why you're down 23% in one day. This was older, you know, Southwest cuts its view, 737 MAX groundings. We all know all the problems with 737 MAX. Here is the day it happened. So remember the slide earlier? I said, what is the common sense reaction to the news? It's to go down. They're cutting their financial view because the planes are being grounded. McFly, of course, it's bearish. Guess what? It happened on this day. So it had a small gap down and an engulfing range expansion on bad news.
It had been falling for 2 months into support. Somebody knew the news was coming, I would think.
Right. Well, of course, it was priced in. Right. So it also goes back to what I said. The news, what was priced versus reality.
Yeah.
And, I'm not saying I would buy this one, but we might do a put spread because this is bad news and we love to sell, options on turning points. And news is going to escalate the volatility, which will increase the value of those options that we sell. And
Now, what I was going to say, Dan, if you go back to that for a second, and you said you wouldn't buy it, and I wouldn't buy it either. But I always like to point out, the technicals versus just things that happen in the market versus the psychological hurdles of becoming a trader, a professional trader, whether it's intraday or swing. And it's like, you see all this resistance here and this thing's been falling. Why the hell would I buy that? I wouldn't. But then you look at something that this thing just ripped up for 5 days in a row and you're scratching your head and it's like, do these technicals really work? And they do, but if something like this, if it isn't part of your trading plan to trade something like that, just move on. Who cares what it did?
well, just to add one more comment, our approach would keep you out of shorting this.
True.
So this was an old Bitcoin stock. And so journal, Bitcoin rises 16%, touching 5,000 in Asia. Well, Bitcoin's 20,000 now. And if you all go back and look at this chart, this was the igniting gap breakout. But here's what the newspaper said. It's the biggest, blah, blah, blah. But the news, right? They didn't know what to say. Remember I said, oh, Bitcoin's up on blank, fill in the blank. And in this case, it was funny because they're saying, I don't know why it's up. They're saying that's what that means. I don't know why it's up, but that's a more professional way of saying it. But it lacked a catalyst. So how do you explain this, Greg? And what does this mean? But go back. This was the igniting breakout from Bitcoin 5,000.
Oh, yeah, it had the volume there and was being accumulated, and that's another professional gap.
Right. So we don't care about the lack of catalyst as chart readers. This was just a week ago when we had this. So this was the CPI ugly number that came out on a Tuesday, I think, a week ago Tuesday. A deep retracement. Look at this, one day. Took out the strength of 1, 2, 3, 4 bar bounce, one day wiped out. This is what we call a bear 1, 2, 3 continuation. And we were taking advantage of the shorts in the market. And this one, we actually just, we did a directional bearish option trade. And we held this 5 days. This is a little snippet of our closed trades for subscribers in the members area. And we made 40% on an option trade is based on this.
I was just pointing out the continuation pattern there. Right. So this was the igniting move, and it stabilized and it popped above the highs. So one of those failure type setups that this is a great continuation pattern.
And you can tell by, it's actually 6 days. I got to fix that because it's not counting the current day. But we sat through that. I think we covered half if you read in here. Or actually we got out into 3 lots. But yeah, we held through that and got out in 3 lots in the weakness.
So what Dan is showing there, that little box for those that aren't aware with the blue header, that is from the member tracking sheet. Every trade is posted in the member area and tracked with comments that are updated, as well as those comments are sent by a text message and then updated in a tracking sheet. So everything is there to learn from. And then at the weekend, there are charts, and during the week, Dan will post a chart with the new recommendations, and then everything is updated. So you know what's going on every step of the way.
Yeah. So put spreads now on these type of news events. So particularly with extended greed and fear, and then we have a reversal. So like climactic patterns, we love to sell credit spreads. This, I'm showing you just an example of put spreads. So we find bullish patterns. They set up in different ways. We short a put under support. You can either do it naked if you want, or take some of the money, buy a further out of the money put. And what that does is limit the buying power requirement at the brokerage firm and limits your maximum loss if the thing, gaps against you in a crazy way. But the money received goes right into your brokerage account, and it's 100% yours to keep. If it stays, if it expires worthless above the short strike that you sell. So here's
Anybody, I was gonna say, is anybody in the room not aware or know what a credit spread is, how that works? I mean, Dan gave you the quick explanation of what it is, but it's really a simple strategy. You have to learn how to manage them, how to pick them and all of that. But basically the essence of it is you're selling something more expensive and taking part of the proceeds and buying something less expensive. And the difference goes in your account, and if prices don't go to where you believe they won't, you get to keep the money. It's really simple.
Right.
There's a lot to learn to do it properly.
And you can still keep the money forever if you don't mind taking assignment of the underlying stock, and then you're buying it at wholesale instead of retail because you have an improved cost basis. All right, so here's a couple of examples. I'll go through these quick because they're pretty much the same. So this was FedEx's crazy gap down. It was a pre-earnings release warning. FedEx warning just roils the market. They're saying things are bad. The CEO got on and says, we're headed for global recession. So look at this monster gap down. So that's not a compelling pattern that I would want to buy for a swing trade, but it's a big gap. Fear is massive. Volatilities on these put options have skyrocketed. So what we're thinking is wait for stabilization, and we're going to sell these expensive puts. So here is a Telegram alert, which is how we communicate with our subscribers intraday for new trades and adjustments. And we sold the 140s. So this, I kind of summarized it for you in one or two sentences. Our approach, yesterday we had option coaching, and we spent pretty much the whole hour on going through our checklist with multiple examples. So I see a chart, and then I pull up the option table, which just for fun, I call it the juice bar. And here's why. How far out of the money can I go to get paid for the risk I'm taking? How much juice are you going to pay me? And so the stock's at 160. We went $20 lower. And look at this alert. We got paid $1.20, $1.10 a share. This, I grabbed the screen a little bit late because we already have an unrealized gain here. This is my position in the thing. And then you say, does the chart support this risk for the days to expiration? Well, this one happened to be 7 days to expiration. And a couple days later, we said, you know what, just close it ahead of the FOMC on a 10 lot, $650, and the stock really went nowhere. So these, I'm going to go through these a little quicker, these next three, because they're all the same. And we found these were trading news today, right? So if FedEx got clobbered, what's the logical thing to think? Now, I spared you from putting a picture of a cockroach up here, but you may have heard the theory of the cockroach theory, that if one leading company comes out and releases really bad news, well, there's a high probability that the main competitors have those same cockroach problems. So let's see how this one, so UPS, the number two, the FedEx. Now this one, Greg, maybe you can describe, because this one is, as you mentioned it earlier, is way different than that FedEx one.
So Dan, I was typing into the social media explaining to somebody about credit spread, so I missed the comment on
Well,
FedEx. Sorry.
Well, just why these next three are superior setups to this nasty gap in no man's land. So this is UPS, the main competitor, and we call it I sent this alert pre-market. Look what I wrote here: potential gap and snap with large major support. So here's where this thing opened up, courtesy of FedEx. So
Right.
we put it in a 5-minute window and we watch for stabilization and apply these two questions that I just typed out here. And we sold the 167s way down here. That, Greg, 0 days to expiration.
I love that. That's my favorite, of course. But
So
everybody, think about what happened here and how powerful this is that here you had a stock that had already been going down for a while. It's accelerating down. And when prices are accelerating like that, traders, institutions run to buy put options. And so when that happens, it's like supply and demand, the price goes up. And so now when it gaps down, those that want to buy put options, it's like, the idea of, hey, Mr. Insurance Broker, my house is on fire and there's a tornado coming and I need some homeowners insurance. He's like, no problem, buddy. It's going to cost you the price of a new house. And it's like, do I really want to pay that premium? But this is what happens with the options down here where they're so jacked up. And so I was like, okay, let's sell this credit spread with a day of risk. What's the likelihood after going from here and gapping down to here? Could it happen? That's your risk. The same as, any other kind of risk trade like that. What's the probability?
But we're also not jumping in front of a moving train. We're waiting at the open for stabilization.
Yeah. Right. Which could be 10 minutes, 15, whatever. The longer you wait, the more that premium begins to disappear. So it's a balancing act.
All right, so here's another one. This was a trucker. C.H. Robinson, we did the same. Look at this. Week ago, we sold the $90 strike. Look, Greg, look at 90 down here.
Crazy.
Up here, under all of this support, $700 profit if it expires above that number.
What was the time to expiration? Or you went out?
This one was longer because I didn't have a choice. But we're still going to make money with volatility contraction when the storm moves offshore.
Right. So again, you have people that don't understand some of the terminology. And so that volatility contraction is the same as, hey, I need to buy my protection. And the premiums get jacked up on those put options. So what happens, Dan used the analogy, the storm moves offshore. It's like, hey, things are now beginning to stabilize. And as they stabilize, that contraction of volatility or that stability, that uncertainty begins to dissipate. And now the prices, the options just get crushed.
Right.
And you don't have to wait the 35 days. So they'll get crushed relatively quickly, but there's still that time premium in there.
So we sold this one 19% lower. I can't even show you the 37.5 on this particular chart. And we got 65 cents a share. So that's why I went through those a little quicker, because it's same day, same concept. But when we see something we like, we'll hit the accelerator button. And this is Roger. We love him. He loves selling these things. This was it. He sent us this quote with this picture, and I love it. And this is what he said: I made money and the stock went against me. This is an absurd strategy. And I would say, yes, it is, using our approach. If you do it blindly, without charts, without money management, then it's not an absurd strategy because you can get run over if you don't know what you're doing. But
Basically, you're an idiot.
we have an amazing success with it. So this was an older news also, Facebook, getting probed here by the FTC. It fell 12 or 13%, whatever the math is. Look at that beautiful double bottom. So this thing will reverse eventually. So we use our technical approach to tell us when it's reversed. You don't jump in front of this train. And this is a quality double W bottom. You got a retest here, another little kind of resting bar in a range expansion engulfing bar. And so we sold out of the money puts on that. Brokerage rating changes, happens every day. Does that mean I trade them? Apply what we're teaching you here today to tell you if you're going to trade them or not. So what I'm showing you here is Caterpillar slides as Deutsche Bank cuts rating to hold on backlog concerns. So it was gapping down pre-market. Okay. Stocks that don't act bearish on bearish news are bullish. I always look at competitors. That's cat. Let's look at deer. So Greg, cat and the cockroach theory.
Yeah.
How come deer is up pre-market? And what do you think of this chart being up on bad news of the competitor?
Baked in. Institutions don't care about the bad news.
Right. So this, who cares? Right, you just said it right there. Who cares? Is there a compelling setup? So this is a huge retest pattern, new low plus. I got flat moving averages. If this trades over this bar's high, that's bullish. Netflix. So Yahoo Finance, why Netflix deserves to be shredded after its latest earnings report. So Greg, explain this bar on that comment.
It gapped up that day. That's an interesting hourly chart. And yeah, I mean, it's like,
so it's telling
the
me
news was it not shred, was like throwing fuel on it for it to go higher. You know, it had to have been going down. Well, I can see it was, I don't know on the daily chart, but it was definitely had to be going down, and it was nobody cared anymore.
right. Netflix surging pre-market on negative news. So this is the market open, and so I don't care about the negative news. It's actually bullish that it's acting positive on negative news. So if I have a technical setup on the time frame I'm trading, I'm looking for bullish stock and option trades. And I love selling puts on earnings because the volatility is so high. So Netflix is one of our usual suspects that has good juice, as I call it, premium. So over this bar's high would be a no-brainer shorting the 345 puts or lower. Over the high of this bar, it ain't going back down here. I mean, it can, of course, but we're talking probabilities.
Right. And everyone, there is, I like to use the terminology balancing act as to how much confirmation you want. But as you see, some of these things are just so ridiculously, the options get priced so ridiculously that, they're very compelling to do them, especially for short-term trading opportunities. But these are also great directional. We're talking options and credit spreads, but look, some of these things are just great opportunities for directional trades, whether you want to do puts or calls. But we're looking primarily for those kind of professional gaps to do those directional things and using puts or calls versus, something that maybe just bottoming out, makes a whole lot more sense to do a put credit spread.
Yeah. All right, so this is during COVID, so a little bit older, but a nice little case study here. So RCL outbreak shocks the travel industry. they reported 48 passengers have COVID on their ship that was 95% vaxxed. So go to the first slide about what you should be thinking. I should be thinking, let me pull up the chart, and affected companies, I said travel, right? So airlines, hotels, and travel things. So here, this, it did gap down right here on the negative news, this bar with the arrow. And then it closed 80% into yesterday's bar. So that's like pretty much negating the bearishness. Well, this is H actually, so this is a hotel, not RCL. But I'm showing you how this, the negative news on the cruise ship brought down hotels, the travel industry. And then the next day it gaps up over all these bars. So we shorted the out of the money $80 puts for $1.55 a share. As always, we give our setup. It's a bullish gap from a bullish engulfing reversal on the 20, 50, 200. And that's after it, and I digested that negative news. This was the same time. This is the sector, jets, airlines. So same thing, Greg, here. It gapped down to support, bullish close, and gapped up the next day. So we actually gave this to our subscribers, buy the ETF on this gap up day. Buy it, stop days low.
Yeah, it's just someone in the chat, the other chat, asking me about AMAT. The weekly chart is making a retest pattern. And I was telling him it looks somewhat like the Jets chart that you're showing there, which is a retest pattern.
Yeah, we'll look at it in a couple minutes here. We're almost done. So same time of this of the RCL news. This one, remember I showed you RCL, or that's Hyatt actually. They didn't get over the high. Look at the main competitor, CCL, had a bearish gap down, very little tail, and it took out the prior day's high. So we gave two trades to our subscribers. One was buy the stock. It's a bullish retest and a bear gap negated on bearish news. And then we gave our out of the money put spread down here, sell the $17, $3 wide put spread. And we have two beautiful trades that we found because of the bad news on RCL. Plus Hilton or Hyatt, and plus Jets. JP Morgan downgrades GE, saying, look, this thing can get cut in half. It's $10 and I think it's worth $5. Okay, so I'm thinking that's pretty bad. So we had a bearish gap here. This is pre-market. I should have marked it here. These vertical lines are pre-market. So the market open, we have a wide range igniting breakdown. Greg, this is right up your alley.
Perfect.
Look at that little bull sandwich sell setup. That was a no-brainer day trade short.
Yeah, see, I don't, the way that 5-minute chart, and Dan's got the some of the pre-market data on there, and you see how it went down first thing in the morning, wide range bar down. I do not enter that, and it looks like a no-brainer, and it can be with a big stop, but there can certainly be whipsaws, and who could have said it could have went up to fill the gap or halfway to it, whatever. I always wait and wait for some kind of retest, or I wait for some kind of consolidation, some kind of a confirming failure pattern, and it's a higher probability trade.
Yep. Steve Wynn, this was, again, a while back a little bit, hourly chart, just to show you that it's extended, breakout failure. The news comes out where, dozens accuse him of sexual misconduct. Okay, I pull up a chart. I don't care about the news. you all have fun with the attorneys. It's not my wheelhouse. Trading is. So now, Greg, I have a bear breakdown, breakout failure, bear 1, 2, 3, price void. Now what do you want to do?
What do I want to do with that?
Yeah, short the low, of course.
Oh, from the top there. Yeah. I was looking at the current thing. Sure, because it's going sideways, and you've got that little failure right there, and then the retest, and you got the break under there. So getting on board is the hard part on some of these, and they just they explode lower. So yeah, you got that 1, 2, 3. That bar, you got the 1, 2, 3, and the pre-market data, which is just that bar right there. That's helpful.
Yeah.
You got to be looking at this stuff. So the advantage here with news is that it brings your attention
Correct.
to the stock, whereas you may not look at it at all.
Correct.
And now what Dan is showing here and we're talking about is how to interpret the chart with the news and then how to profit from it, which is, well, we're all focused on how do we make money from this stuff, right? So the news brings our attention to something. We decide to look at it, then we know how to interpret the chart. And now, what's the vehicle do I want to use? Do I want to buy a put? Do I want to short the stock? Either one is fine.
Right. And do I want to trade with the news or against it? And what about other people hurt and benefit? I'm looking for those trades too. All right, one more, and then we'll look at real charts as we always do. NBEV here, making a deal with Walmart, big bold gap up. This looked like it was headed for a death trend, and Walmart just their marketing people saved them. And so big gap here on volume. Again, this is pre-market right here, went up, buy setup. This is the first 15-minute bar at the market open. Could have bought the high of that. Kind of a sloppy bull flag here, if you will. And then this is a continuation pattern that we teach called a bear sandwich. And, you had a price for it. And so in this case, we traded with the news. Every single chart we show you starts with Greg's course here, the swing trading, which has all these thought building modules, and it's all the concepts combined that make up our approach to teach you, as I say here, how to objectively trade anything that moves. He has money management in there, trader psychology, and whether you're trading stocks or options, this is the starting point. We were talking about it in the green room today. Some people don't believe in technicals and want to do a mechanical approach to trading whatever, and we don't. If we don't have a bias and a setup, then no trade. Mastertrader.
By the way, if you go to the site, there's a drop down. You can read about each module or thought building lesson. There's a little explanation there. You click the little button and it opens up and explains that little little snippet about the section there, whether money management, psychology, patterns, candles, so on and so forth.
And for the options, again, our technical approach, go to mastertrader.com/spread trader. We have 2 of these credit spread courses. We've talked about a couple of them here. This mastering course, very detailed 12 module course, and module 7 is specifically related to a lot of things that we've been talking about today, selling credit spreads on high volatility new stocks. And then the directional course, we gave you a couple of examples when we buy options because of the leverage and limited risk, which are superior when you're dealing with liquid options. So that's it. Greg will pull up the charts and we can look at anything you want. And Greg, I actually triggered the Dollar Tree put spread right before we started.
All right.
Couple long, the list we've been looking at here today. Interactive Broker, Starbucks, Nike.
Yeah, market's
80.
recovering here. All right. So I've been chatting there online. Somebody owns this and sold covered call, which is great. Perfect timing for selling a covered call on something like this. It's been going up. So what are we looking at here? So this screen is just one of the multiple screens that I use in this platform. And this is the S&P ETFs, where I can keep track of how they're performing today or during the week, month, quarter, year. Blah, blah, blah. Are they above or below moving averages? How are they doing? And then, we see energy's doing well, and click over here to the stocks in it. How are they doing? Which are outperforming? And we can just click on this and just see, hey, look, energy stocks, Schlumberger taking out the highs. Now, it's up a whole heck of a lot. I wouldn't be buying it here, but that looks good. Look good weekly chart. Suggests it's going to go higher. Institutions have been all over energy because it's the only thing that's been going up this year. They fell back a lot, but from the high, they've done this big correction, but they've been doing great for quite a long time. So they're coming back for more. Why did well, a lot of things popped up today. Look at the sector. So crude oil has been down a lot, and the energy stocks held up relatively well. Crude oil pops up like it did. Energy stocks go up, sector goes up. Now they're going to stall. So USO is the ETF for energy, and then again, top-down approach, which if you want to learn top-down approach, there's a course on the site that teaches exactly that about the markets. Inexpensive course, gives you how the markets were created, sectors, markets, stocks in the sectors, and foundation of technical analysis and options and all that's great. Okay. Time to look at OKE. We made time. Again, another bottoming stock. So this one, oil sector, energy sector, definitely relative weakness to the others for whatever reason, but you can see it's well below the moving averages. It popped up with others, but not above any resistance. So that one is definitely weaker. I want to be careful with that. Does your option course teach how to choose prices on spreads? 100%.
Absolutely, right.
In great detail. So Microsoft, I think this is going to go higher based on its recovery today, assuming it does, because this is down a lot and it had the nice gap up. Go and listen to the pre-market recording that we did this morning. One of the things I pointed out was, look, here's this negative open, but these 2 days are powerful. And I explained the reasons why. So even though things might come in a bit and correct a bit, don't ignore the power of these 2 days that occurred and this breakdown failure that occurred. So we were looking for the bottom, last week. And then there was this turn and then the news and this breakdown. And I explained in the weekend letter, look, if you're not in front of your screen, you can participate in what we do because everything's updated through text messages. But the weekend letter, the advisory letter, gives great detail about the broader markets and patterns through videos and explanations and these sectors and at times stocks in them. So the advisory letter is a great letter if you're interested in swing trades and some option trades and what the markets are doing. So yes, morning report on YouTube every morning at 9 o'clock, B. Every morning, 9 o'clock, Deanna are live there. As well on Facebook and Twitter, if you're there, you can find it. Yep. So this is a nice little pattern, and if it holds on to the gain, it should be able to go higher. And this is the weekly bar. We'll see where this ends. It's already pretty big in the range, but you had this gap up. So we'll see if it consolidates or whether this holds on to the gain or can follow through. We got the markets here chopping around. So far, so good. What we don't want to see is this go back down to the lows, of course, today. You want to see it close green now that it's recovered. And you can see how this is moving back up. So as it comes into this resistance. And so, this morning, in the green room, one of the things that we talked about was, timing with markets. And it was so simple because our approach is simple. And what I explained to everybody was like, look, the market should turn here. This was ugly looking in the morning. I said, just look to the left. This line is, the Qs are going to stabilize here. And lo and behold, they did. No fib lines, no trend lines, no Ichikumi clouds. Just looking to the left. Didn't think it could recover this much, but that's new information about buyers are, aggressive here. Institutions are willing to, buy this, and then it didn't go down. I don't know what happened there on the 5-minute.
That was one of our scenarios. They're going to negate the gap down or come in more and get some type of retest. Yeah.
Oh, we got some moron on YouTube now posting bullshit. And I don't know what these bots do, why they come and do this crap. I don't know. Just idiots. Anyway, dating crap. All right, some idiot out there. Okay, is the credit spread cost inclusive of expiration trade? Every credit spread revolves expirations, Marcel. You can't do an options trade without a consideration to time to expiration, especially with a credit spread, because you have to incorporate that time to expiration, which is going to mean how much there's going to be premium for time in there. So if we can find that premium and patterns where the time to expiration is hours or a day, the probability of being right over the course of hours or a day, right? The odds are in our favor because we use charts. Now, when you go out 30 days, 40 days, 60 days, there's so many different variables. And so that's risk involved. But, is the trend up, down, or sideways? And all of that is what we need to consider into consideration. Things you have to think about. Apple. I wouldn't call today a power bar today. It's in a downtrend. This has been an underperformer lately, which isn't typical, but this could be a continuation pattern, just like Microsoft and, others, semiconductors. There's that NVIDIA. See, I said this morning. So this morning, I shorted this. Right here, it was on a continuation pattern on the 5-minute and the 2-minute, and it wouldn't go down, right? And the ticks were pounding minus 1,000. I was like, I'm getting out of this thing break even, covering commissions, and it went down a bit, but look at where it is now. So that information was in the moment was conflicting because the pattern, this was gapping below this bar, and it was, bearish. It should go down. I was looking for it to continue, and it wouldn't. So institutions were buying this on the way down, and other things like Netflix, right? That was like, flowing to the downside. And their NVIDIA was sitting there with the bid getting pounded, and it wouldn't drop. It was showing relative strength, and lo and behold, now, we look at where this is today. This morning, it's all today, but now it makes sense why it wouldn't go down like Netflix was. So there's a lot of information to understand the markets, right? That top-down approach. And as you get into intraday trading, there's more information to process. Now, again, one of the conversations in the green room today that we talked about was, because someone had asked about looking at certain information for making decisions. And what I shared with them was, look, it's human nature for us to want to know everything there possibly is. But, we have almost a certain number or level of criteria that we can interpret, intraday that's simultaneously happening. So, it's a learning process, but that's what Dan and I are sharing here in MT Live and every morning pre-market that you can come in and listen to that and gather the information. And those in the green room, we share our experiences and knowledge every single day. And as we like to say, the courses are the fast track to learning all of this and then spending time either through the newsletter or in the green room if you can be with us real time. But Dan and I are always available through email. We're always answering emails and, helping subscribers and students to become successful at this. We've been doing this for about 30 years now. And so give it a shot. Let's look at a few more. So we got a few more minutes here.
Look at, I just posted in IBKR over the high I like. And Starbucks went already.
Yeah. I mean, you brought that up this morning, Dan, and Starbucks. I was like, all right, they're gonna have to show their strength, in this market because the markets were kind of ugly, the internals were ugly, and now things are turning around. We'll see if they hold. You see, the AD line is still pretty nasty, minus 1,600, but prices have come up off of the lows, and the 10-year is still holding up near the highs, still below 3.8. But so there are some factors out there that could throw a monkey wrench into what's so far bullish right now. But we'll see how that evolves through the trading day, and that's what we do. SPUX. Yep. Now it's not even a 1, 2, 3, Dan. It took out the highs.
I know. I was hoping it would wait till 3. Yeah.
Yeah. No, it's not a no-brainer pattern because it came down so hard. But this is the void concept that we talk about. It came down hard, but it's the weakest link because there's no resistance. Look, see how it came down? There's no resistance, so it has the potential, to move back up into this area. Now, and bullish price action, going sideways here as the market fell, and now it's moved back up. Donna wants to look at WDC.
Yeah, we were talking about that reversal on Monday. What's the entry?
So why would we think this would reverse? The top-down approach. So if you listen on YouTube from last week, we were talking about we're close to a market bottom, and you can go look at the videos and why, but it's systematic why. But with this, right, we're looking to the left, right? We see that it's coming to an area of support. The market timing is key with these. And then you see this little breakdown failure and turn. So that ignites a counter trend move. These are good for put spreads if there's juice. It came down so hard. And
Hey, Greg,
especially day trading.
Greg, because of today's subject, this is perfect timing for us to end on. I've been watching this for the last 10 days, WDC, because it got multiple downgrades near the low. And I'm like, this thing has to be near a turn.
Yeah, downgrades near here. And it kind of reminds me, Dan, going back as many years as we're doing this, Yahoo doesn't trade anymore. But
Right.
back, I think in 2000, Merrill Lynch, which doesn't exist anymore under that name, it came out with, that was their best idea.
I remember.
Every day, what's Merrill Lynch's best idea? And we'd listen to see what it is. And Yahoo had already been up like a gazillion %, right? And we were in the White Plains office, and it's like, this ain't going to end well.
Right.
That was the top, and it went from like, I don't know, 1,000 before splits down to $8,
Yeah.
and they downgraded it all the way down, and right down at $8. Right? They jumped on the downgrade, son. Yep. Yeah, the news says there's another down and bottom. What do you think from the charts? News says another leg down and bottom. Well, if you're talking about the broader markets, I would agree that there potentially another leg down into this area here. The monthly charts, look at the monthly charts. They got nasty wide range, nasty bars. So right now, they're in the lower half of that bar. So we're just getting a little counter trend move. Look at the momentum here. Go to the website and go look under chart of the week. And under chart of the week, you're going to find a chart of the week about reading momentum. Read it. You'll figure out where the lows are when it's making the low. We'll be back tomorrow morning at 9, next Wednesday at 12. We'll talk soon. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.